Can you have both gap insurance and new car replacement? Have you ever wondered if you can have both gap insurance and new car replacement coverage? It's a great question that many car owners face. Let's break down what each of these coverages does and how they can work together. Gap insurance is there to protect you if your car is totaled or stolen and not recovered. It covers the difference between what you owe on your auto loan or lease and the actual cash value of your vehicle at the time of the loss. Cars lose value quickly, so it is possible for your loan balance to be higher than your car's current market value. In this case, gap insurance pays this difference to your lender, helping you avoid a financial burden. On the other hand, new car replacement coverage addresses a different issue. When you buy a new car, it loses value the moment you drive it off the lot. If your new car is totaled shortly after you purchase it, standard insurance usually pays only the actual cash value, which may be much less than what you paid. New car replacement coverage fills this gap by covering the difference between the actual cash value and the cost to replace your totaled new car with a brand new one of the same make and model. Now, here's where it gets interesting. Since gap insurance and new car replacement coverage address separate financial gaps, it is indeed possible to have both. For example, if your loan balance is higher than your car's value, gap insurance protects you from owing money on a totaled vehicle. Meanwhile, if the cost to replace your new car exceeds both the loan balance and the car's depreciated value, new car replacement coverage ensures you can get a new vehicle without paying extra out of pocket. However, whether you can have both coverages depends on your individual situation. Factors like your loan amount, how quickly your car depreciates, and your insurance provider's offerings come into play. Some insurance policies may allow you to add both coverages, but it is essential to review the terms, limits, and eligibility conditions. For instance, there may be mileage or vehicle age restrictions for new car replacement coverage. In summary, gap insurance pays off the remaining loan balance if your car is totaled or stolen, while new car replacement coverage pays the difference between the actual cash value and the cost to buy a new car if your new car is totaled early in its life. Having both coverages can protect you against different financial risks related to depreciation and loan balances. Consulting with an insurance agent can help you determine if having both coverages is beneficial based on your loan terms, vehicle value, and personal circumstances.